Applied Digital ended fiscal 2026 with 1,410 megawatts of data center capacity under signed, non-cancelable leases. About $36.2 billion of contracted revenue, and roughly 100 megawatts of it was actually switched on and billing. 7%. Everything else in this filing follows from that one ratio. Here's the book. 5 campuses, every lease structured take or pay and non-cancelable. So a termination for convenience requires paying the full remaining contract value. Polaris Forge 1 is leased to CoreWeave. The other 4 go to investment-grade hyperscalers the filing does not name. Total contracted revenue over the initial 15-year terms? $36.2 billion. Against that book, this is what actually got billed. Revenue went from $165.6 million in fiscal 2024 to $228.6 million in 2025, to $611.3 million in fiscal 2026, up 167% in a year. The contracted book is 59 times that last bar. The margin turned with it. Gross profit went from $11.8 million to $214.5 million. Gross margin from 5.2% to 35.1%. On the surface, this looks like a company that just found its economics. And yet the operating loss more than tripled to $236.5 million. Here is why. Selling, general, and administrative expense was $332.1 million, and $216.4 million of that was stock-based compensation, against $18.1 million the year before. Stock comp charged to overhead was larger than the entire year's gross profit. Add back everything that never touched cash, and the operating line inverts. $220.1 million of stock compensation, $67.4 million of depreciation and amortization, $59.7 million from writing assets down to held for sale, and $2.4 million of abandoned assets. $349.6 million in total. A reported loss of $236.5 million becomes a positive $113.1 million. The cash flow statement says the same thing without the arithmetic. Net cash from operating activities was positive $89.7 million, against negative $115.4 million the year before. A $205 million swing. In the same year, the reported operating loss more than tripled. Look at the segments, and the consolidated loss disappears entirely. Data center hosting, the crypto business, made $48.3 million of segment profit on $154.4 million of revenue. The HPC hosting business, the AI one, made $39.1 million on $385.3 million. A year earlier, that segment had 0 revenue and lost $12.1 million. Now the balance sheet. Gross property and equipment reached $4.31 billion, up from $1.28 billion. $2.78 billion of that is construction in progress, meaning it has never been placed in service. And accumulated depreciation across the company's entire history is $77.6 million, 1.8% of the asset base. So the depreciation charge has barely started. Depreciation on owned property was $48.5 million this year. Apply the company's own disclosed useful lives, 15 to 20 years blended, to the $4.25 billion depreciable base, and steady-state depreciation lands around $210 to $285 million a year. That is our estimate, not a company figure. The risks are concentrated. 3 customers were 59, 25, and 12% of revenue, 96% between them. The 59% customer is CoreWeave, and it was not a customer at all a year ago. In March 2026, CoreWeave moved 2 data halls and an entire building lease into a wholly owned special purpose vehicle, releasing the parent and posting a springing guarantee instead, which makes valuation a question about delivery, not multiples. $36.2 billion over 15-year terms is about $2.41 billion of revenue a year at full delivery. Put a stabilized margin and an exit multiple on that, discount back at 12%, and you get a range of about $5 billion to $17 billion. Today's enterprise value is $11.5 billion. The market is already at the base case.
Nobody wrote this by hand. The segment table, the held-for-sale charge, the stock compensation split, and the construction in progress line all came out of the filing's own XBRL, and the same pipeline runs on any of the 10,000 companies that file with the SEC. A private company reporting in that same format is the same job. This entire analysis was built on the RoboSystems SEC shared repository, structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.